Want to buy a home in small town Minnesota, but lack the cash down payment required? Well, how about zero down payment? You'll want to consider the zero down loan from the USDA Rural Development Program. This program is for rural Minnesota. Some people call it outstate Minnesota. You know, I never liked that term. I lived in Winona, Lake City, Red Wing. People would say you live outstate. I don't know what that means. I prefer greater Minnesota because living in a small town is greater. If you live there, you know what I'm talking about. Greater Minnesota includes places like Red Wing, Owatonna, Cannon Falls, Delano, North Branch. I mean, there's just tons of cities that will qualify for this program. It does not include and is not available to home buyers in the metro area of the Twin Cities. Or Duluth or Rochester, for example. So let's talk zero down payment loans from USDA in greater Minnesota. I'm Peter Lindquist of the Lindquist team. We're going to talk about USDA loans and how it works as a home buyer, some of the unique guidelines for it. We'll take a look at the map and I'll show you how you can use that map yourself in order to find various properties. We'll talk about the maximum income limits, everything USDA. And you know, if you like this video, would you please click that little thumb? It just tells the world that you like the video. Subscribe to our channel. We produce a lot of great videos on home buying. And if you've got any questions, feel free to leave it in the comments below. Again, I'd really appreciate it. So let's talk zero down payment. The program is USDA Rural Development, or sometimes people refer it to as USDA or RD, but one way or another, it's all the same program. People hear the word rural and sometimes they think in terms of farms or hobby farms. That's not what this is at all. This program is designed for developing smaller communities. Generally speaking, it is for towns, non-metro towns that have a population less than 20,000. Sometimes USDA will extend that up to 35,000. So it's really a program designed for helping you to buy a home in these cities, and also has some provisions for outside of the cities in order to qualify as well. Now, just because it's zero down doesn't mean it's zero cash to close. There are also closing costs and there are prepaid expenses, and those can be substantial. But USDA in particular offers some really creative ways about how to deal with that. So I do have home buyers that have qualified for USDA and use just a couple $100 in order to be able to buy their home. So let's talk about some of the basic qualifying parts of USDA. It is zero down payment. Minimum credit score of 620 is required for home buyers. And debt to income ratios are generally 29% of your gross income for your housing payment and 41% for all debt payments. That's a little bit more conservative than some programs, but then again, you're putting zero down. So USDA tends to be a little more conservative on qualifying. You know, some buyers think of low down payments and they think of FHA to begin with, but maybe they haven't heard of USDA as a zero down payment alternative. If you compare FHA and USDA head to head, and you can qualify for both, USDA hands down is a better deal. It has lower mortgage insurance costs. For example, right now, FHA's mortgage insurance monthly is 0.55%, USDA is 0.35, and then there's an upfront premium. With FHA, it's 1.75, and it's 1% on USDA. That might sound like a bunch of gobbledygook, but USDA is less expensive and will result in a lower payment, even if it's a zero down payment. Now, it does match with FHA appraisals. So if the property you are buying does not conform to an FHA appraisal, it won't work for USDA either. That mainly is concerning chipping paint on homes that are older than 1978. That would need to be scraped and painted and all the paint chips picked up. prior to closing. So if you're looking for kind of a fixer-upper, sometimes these government insured programs are not the best. FHA will qualify you for more. There's no question about it. Higher housing payment, higher total debt to income ratio, but you pay for it in the form of higher mortgage insurance premiums. So that's why if you can qualify for both of these programs, you'll want to take USDA. There's a couple of things that you need to know. One is that there's a maximum household income limit. I'm going to show you here in a little bit about how to calculate how much that household income is. It varies from one county to the next. So depending on your situation, you can calculate it on the website I'm going to show you, or just contact me. I'm glad to walk you through it. And USDA is filled with all kinds of little caveats. One, for example, is that if you have 20% down in liquid checking, savings, stocks, and bonds, you don't qualify for the program because this is needs based. So you would have to have less than 20% down available to you. This, by the way, does not, that 20% down does not include things like 401k or pension funds. In terms of household income, we look at all adult members of the household and what kinds of income that they receive, that they don't even have to be on the loan for us to have to count that. So the program looks at the household, might be one borrower and 8 people living in the house. And if 7 of those people all earn income and they're all adults, now we have to count all of that income to see if you qualify for the program itself. So I want to just take a few minutes and show you a map and how you end up qualifying. The link for the map is in the description below, so be sure to look at it after watching this video. Okay, I've brought you to the website for USDA to determine if the property is in an eligible area. When you get to the site, you're going to start by clicking this upper left-hand corner where it says Single Family Housing Guaranteed. And we're looking for property eligibility, and then we're going to click Accept. When you get to the site, it's a map of the entire United States. You're going to need a property address. So I'm going to go ahead and paste one here for West 6th Street in Red Wing, Minnesota. And I'm going to click on Go. And now it will find that property. And if it says this address is located in an eligible area, well, then obviously that's the address. By the way, this property address is the courthouse in Red Wing. So the property itself would not be eligible for financing, but I wanted to get to Red Wing so you can see that Red Wing certainly is in the area for USDA. Now, if you want to find out kind of what areas are possible, you can zoom out on this, and any area that is shaded beige like this is not eligible. So this is the Twin Cities area. You'll see outside of south of Hastings, you'll see Red Wing, Cannon Falls, Goodhue, Zumbrota. All of those are eligible for USDA financing. And as we move further west, you'll see Northfield, Webster, Belle Prairie, LeSueur, St. Peter, Jordan. And you can kind of just move the map up and down to see what areas are eligible. Delano, Howard Lake, Winstead, Cokato, Litchfield, Hutchinson. All of these are areas that can be used for USDA. Each of these areas will have different maximum income limits, but certainly in the Twin Cities area, it's not eligible. Let's zoom out and look at a couple of other areas. So when we come in closer here, Mankato proper is not, but you get outside of town to Belgrade, St. Peter, LeSueur, Nicollet, and New Ulm is all eligible, Waseca, etc. Get to some bigger towns that are eligible. Owatonna, Faribault are all eligible for USDA. When you get over to Rochester, again, the metro area not covered, but Manorville, Byron, Stewartville, Eota, Lewiston, my old stomping ground, Winona, Winona, Goodview, Minnesota, in Minnesota City, not eligible, but you get outside of town, Rolling Stone, Stockton, and so on are all eligible. Let's go down. Let's go down further south. Here we've got Austin. Let's move in here. I want to show you something. So again, Moscow, Windham, Austin Township are all eligible, not Austin proper. If you want to see kind of a specific area, you can zoom in here and you'll see street level. So 4th Street Northwest kind of covers the northeast area, and then Highway 218 on the western side. So homes in this area eligible, in this area not eligible. Let's zoom up to the Duluth area. Okay, here's Duluth proper, and that is not eligible. Get outside of town, Carlton, Cloquet, Solway is all eligible. Most of this area is going to be eligible. If we get up into the Hibbing area, Chisholm eligible, Nashwauk eligible, but not Hibbing. It's a national program. It also covers, Wisconsin, for example, and most of western Wisconsin is actually eligible. I'll note that Hudson proper is not, but if you get outside of town a little bit, and River Falls is not, but you'll see Roberts, Richmond, New Richmond, Baldwin, etc., are all in eligible areas. So that is the USDA map. I just want to know, it's handy to have a address to input in here. Without that, you're not going to be able to see it. Now let's talk about income eligibility. If I click on here, to income eligibility, now I'm going to choose the state. I'm going to choose the county. So Red Wing is in Goodhue County. Now it's going to ask you a few questions. Number of people in the household. Let's assume for the moment that that is 2. Number of residents under 18 years old. Let's make this simple, and let's put this as 0. And now it asks for eligible income. You can break this down, or you can just put in a number. So let's assume for the moment that you earn $4,000 and the other household member earns $3,000 monthly. Those are gross incomes that we are using there. You do need to note that all other income received by adult members of the household needs to be put in here. So if you've got any other adult member in the household, you need to put their income. You've got a mom and dad getting Social Security income, etc. You would have to put that in here. Now let's go ahead and click finish. And this is going to give you now what the income limit is for the program. And what we were looking for is this one, guaranteed rural housing. We're not looking for direct. We're looking for guaranteed rural housing. This shows that the maximum gross income is $117,900 for total household income. What I just entered was $84,000. So this one meets the income limits. If this $84,000 was greater than that, it would say does not meet the income limits. So I'll note here that the number of number of people in the household matters. So here I've put in 8 people, and I've got income. Let's say these are 3 dependents, and none of them earning any money, and there's no other adults earning income. And now you'll see, instead of 117,900, here you go, 155,650. So for larger households, USDA allows a greater income in that area. Okay, I mentioned closing costs. So you've got closing costs and something called prepaid expenses. That's what it takes to set up your escrow account for taxes and insurance, and those can be substantial. So if you literally only have a couple $1,000s available to you, we need to look for ways that you can source those funds that is acceptable to USDA. So let's just talk about a few of them. One is fairly common, and that's seller paid closing costs. You can negotiate with or you can try to negotiate with the seller to pay money towards your closing costs. And in some cases, they can contribute enough that you don't need any money. But the thing to keep in mind is that the house will have to appraise that high. So for example, if you find a house for 200,000 and you ask this and you offer to pay the seller 207,000, but ask them to pay $7,000 towards your closing costs. In that case, seller still gets their 200,000. Well, the thing that both of you need to understand is that the real sales price then is 207,000. So the house will have to appraise out by an independent appraiser. Will have to say that yes, the house is worth 207,000 or more in order for that to qualify. But let's look at a unique part of USDA, a couple unique parts. One is that if the house were to appraise higher than the house, so let's say it's a $200,000 purchase price and the appraisal comes in at 210,000. That means that you could finance up to $10,000 worth of closing costs on top of the loan. So the sales price is 200, house appraises to 210. We can actually take those costs, add them to the loan amount, as long as your debt to income ratios qualify. USDA says that that is okay. That is unique. There's no other program that I know of that's like that. Okay, and then a third way that you can deal with closing costs is with a credit card. Believe it or not, if you've got a credit card that has enough of a limit on it, you can actually pay your closing costs on a credit card and still qualify for this program. That again is unique to USDA. You do have to qualify for the monthly payments on that card. Typically, people will take out like a line of credit or something so that they can use that money for the closing costs on the program. And then there's another one. In Minnesota, there's the Minnesota Housing Finance Agency. I'll put a link in the description below to that program, but also to some videos that I've made about MHFA, Minnesota Housing Finance Agency. You can use their down payment assistance, which goes up to $17,000 actually. You could, no, 18,000 currently. You can use that money to cover your closing costs. And if you use the one that is up to 18,000, that not only does that cover closing costs, but it reduces your loan balance. So it actually reduces your monthly payment. To understand that though, MHFA also has maximum income limits. So in that case, we have to look at USDA and MHFA to make sure that you qualify for both of those programs. With MHFA, they've got a minimum credit score of 640. So even though USDA might go down to 620, we'd have to abide by the MHFA if we were going to approach the program that way. Now, it should go without being said, but all of these guidelines are subject to change without notice, okay? USDA will change its income limits. They'll change the areas that are eligible, and that can happen at any time. So when you are out searching, as part of the pre-approval process, I am going to make sure that we account for those potential changes and make sure that your home buying process goes great. I can help you no matter where you are in the state of Minnesota, or for that matter in Wisconsin. This program is commonly used in western Wisconsin as well, because really it's only areas of Hudson and La Crosse that are considered metro areas that are not qualifying. USDA can be a great solution for home buyers that want to put nothing as a down payment and have creative solutions to deal with closing costs, and prepaid expenses. It's important that you're dealing with a lender who is familiar with these programs, and I am one of those. I would love to help you. If you've got any questions, feel free to reach out.